and welcome back to my channel. And if this is your first time here, hello, welcome. This is Essential Patience and I am Patience. In today's video, we are going to be talking about payday loans. So if you don't know what payday loans are, they're not great. We're going to get all into that. But before we do, remember to like this video, subscribe if you haven't already, and let's get straight in. So I have some notes here. So if you see me looking down, I want to make sure that I am communicating all my thoughts, really driving the point of these payday loans and why they are not just bad, but predatory. So if you don't know what a payday loan, maybe you've also heard of cash advance, which sounds better than just a payday loan. It can also be called a paycheck advance. So I'm pretty sure now it gets more familiar for a lot of people. But basically it is a short-term borrowing option that typically involves a small amount of money. And typically it's not like a 20, 40, 60 month loan. Instead, it's for a shorter period of time, most likely between weeks. So it is designed to get cash to borrowers immediately and who need expenses till their next paycheck. So it's basically borrowing from your future. And payday loans are often used to address unexpected emergencies, and this is why we need an emergency fund and to bridge the gap between paydays and temporary shortage of funds. And when in my channel, when I talk a lot about emergency fund, and even in my real life, this is one of the reasons why I talk so much and stress so much about the importance of an emergency fund, so that when times like this come, instead of having to go get a payday loan, you have an emergency fund to rely on. So if you wanted to get a payday loan, basically you have to prove that you are employed and proof of your income. So you get a percentage of your paycheck early, and then you have to pay again within a few days or weeks at most. So they have to make sure that yes, you are telling the truth, you're actually employed. That's the whole point of a payday loan, that you're going to get paid. You're just borrowing from the future. You need bank documents to make sure that yes, this money is coming. Again, pay between a few days and weeks. So if you don't know, payday loans are very controversial in the financial world. Even in the world in general, if you know anything about finances and kept up with a lot of financial experts or financial advisors, they will tell you payday loans are not advised. I don't know any single person who would willingly go get a payday loan when they're in a good financial situation. And that should tell you something, because we can argue for a lot of loans. People can argue for why you should get an auto loan. They can see yourself putting all your money into a car now, just get the loan, pay the low interest if it's low interest, and just invest the difference. We can argue for personal loans sometimes. If it's like, okay, I wanted to do this project and so putting my own money in there, I'm just gonna use a personal loan. We can argue for mortgages. There's several things that we can argue for, even credit card. But not a lot of people would argue for payday loans, and that really should tell you something and everything about its dangers. So here are 4 reasons why payday loans are predatory. So number 1 is the very high interest and fees. So typically payday loans have extremely high interest rates and fees compared to other forms of credit. So this is mortgages, student loans, auto loans. These are extremely high. The annual percentage rate, which is APR, for payday loans can be several hundred percentages or even higher. Okay, so I'm talking about 200, 300, 400% APR. But because you're paying within a few days and weeks, you really don't see it as much. One example that I saw was one that you're paying $15 for every $100 that you borrow in 2 weeks. So every 2 weeks, for that same $100 that you borrow, you're paying $15. So by the time that your first 2 weeks has come through, you've already paid 15% interest rates, which is almost unheard of on a lot of other loans. And then by the time that a month comes by, which is another 2 weeks, 4 weeks, you've paid 30%. So think about it in the year round. That money is astronomical. You're paying so much money for it. So this makes it difficult for borrowers to pay over time, because typically people who need these debts are not the type of people who can pay back in that short amount of time. So if it puts them in a cycle where they're taking out payday loans, paying payday loans, it's a cycle altogether. This leads to number 2, which is the short repayment period, which I was just talking about. So payday loans usually require payments within a few weeks, which can be challenging for borrowers who may not have sufficient funds to cover both the loan amount and their regular expenses. As a result, many borrowers end up renewing and rolling over the loan, incurring interest each time. So because they're rolling over and they may even need some more funds to go borrow, this is making their interest rates much higher, more fees and everything. So it's a never-ending cycle. Number 3 is the targeting of vulnerable individuals. Like I said, most people have options are not going to go to get a payday. So payday lenders often target individuals with limited access to banking services, lower income, and people with poor credit histories. Because if you have good credit and you have access to traditional banking, you can go get that same amount at a bank in the form of a personal loan for probably much lower interest rates. You're not going to get a loan at a bank or most reputable banks for 100% APR. It's just not happening, not even on a personal loan. Most personal loans are like maybe 10% over a longer period of time. So these are really targeting people who just don't have access to those services or no credit or poor credit histories. These individuals may already be facing hard financial difficulties, making them more susceptible to high cost borrowing options from payday lenders. And this again is in that targeting aspect of it. They're just in a situation where they need the money quickly, and this is one of the very few options that they have, which goes into number 4, which is the lack of transparency. Because of their target audience, oftentimes it's not as transparent as other banks would have to be. And as we all know, a lot of people may say a lot of things about the banking system in the United States, but it is more transparent and accountable to the government than these payday loan systems. So some payday lenders have been accused of misleading, withholding important information from borrowers, such as the full cost associated with the loan. The lack of transparency can lead borrowers into debt cycles that become difficult to escape. So yes, you know that maybe you're paying 15%, but are they leading you to know how much 15% is? If somebody came and sat down to you and said, hey, I will lend you $1,000, but you're gonna pay me $150 interest rate for every 2 weeks. So if you're gonna borrow for a month, that's gonna be $300. And then there's gonna be $100 fee for taking this money out. So yeah, you're borrowing this money for a month, but you're already gonna be paying $400 for it. So you're not gonna just pay me $1,000, you're gonna pay me $1,400. And then if you need an extension, let's say of 2 more weeks or a month more, in a month, you will instead be paying me closer to $700. And then I would charge you to roll it over to that next month. So more like $800. So if you're gonna borrow $1,000, in 2 months time, you'll be paying me $1,800. How many people would actually go and say yes? Of course, desperate people, and a lot of people in some situations would do, but I think less people actually will. And that's why they're not being as transparent, because they know that if people knew all the information and saw it and all the numbers, it probably would deter them and have them find different options. So due to these factors, many countries and jurisdictions have implemented regulation to protect customers from predatory lending practices. These regulations may include limits on interest rates, fees cap, mandatory affordability assessments, and restrictions on rollovers or renewals. It is important for people who are considering payday loans to be fully understanding of the system and to understand the terms, the cost, and possibly explore alternative options that would definitely be cheaper. But let's get into some dangers of these payday loans, because I think we really need to drive it home. I mean, we already saw those 4, and yeah, those are bad, but let's also get into these and probably why you should consider other alternatives and why it's important to strive to be in a better financial situation so you never have to do this. I mean, we can't guarantee everything, but sometimes we can take steps to at least limit it. So one, of course, is the very high cost. We're going to talk about the high interest rates and fees, but overall, it's just very expensive loan. Payday loans often comes with extremely high interest rates, fees. That just makes it really expensive to do it. It's just high cost. Like, it's like borrowing money and then having to pay 4 times over sometimes at the end of the year. So I borrow $1,000 today, and a year from now I have to pay $4,000. the profit margins for the company lending out this money is extremely high. So next thing, of course, is the debt cycle. You can get stuck in this debt cycle. Many borrowers find themselves trapped in a cycle of borrowing due to the short-term repayment period, and they're rolling it over, and it is just a really high cost debt. They may struggle to repay the loan in full, taking out another loan to cover that loan, and just roll it over. It's just a cycle, and it just makes it very much difficult to get out of it, because you're paying not just what you borrowed, but more over and over again. Number 3 is the financial impact. The high cost of payday loans can have a significant financial impact on borrowers. Fees, interest, charges can consume a substantial amount of people's income, making it harder to pay for essential items like, rent, utilities, groceries, and can lead to a downward spiral in financial instability and hardship. So if you are already struggling, payday loans are not the answer, because for most people, it's gonna be a short-term fix, but a long-term struggle trying to get to the other side of it. And next is the predatory lending practices. We already talked about this. Some payday lenders engage in predatory practices such as deceptive advertising, aggressive collection tactics, and failing to disclose the full cost of the loan. Borrowers may be taken advantage of, exacerbating their financial difficulties. Next is the impact on credit score, which credit score is not, again, the most important thing. I think I've talked about it in some of my credit card videos, so check them out. But if borrowers fail to pay their payday loans, it is sent to collections, and it can negatively impact their credit score. And this makes it harder for them to push through in life, because once you have things in collections, it looks really bad on you, and it can impact your credit score for a long time. It takes about 7 years for it to fall off if you don't pay it off and take it out of collections, but it takes about 7 years. And for some people, this can hinder them from getting better rates on other loans, getting better rates on like auto loans and mortgages, and just even going into business. So the stakes are very high. And last but absolutely not the least is the limited regulations. Now, of course, we know some people are putting in place, but at the end of the day, it is perfectly legal for some of these practices to go on. So payday loans are regulated varying ways in different areas and jurisdictions. In some areas, the regulators may be insufficient to protect borrowers from predatory practices, leading to high-risk exploitations. So these are very scary things I'm talking about, and for most people, payday loans would not improve their financial situations in the long term. So if you have different ways of coming up with this fund, it's better. And I have a video on the importance of building an emergency fund. Look at it, look at my different videos on cutting things in your budget, how to budget, getting a hold of your financial picture, and making sure that you have some money saved for the future. I did a whole analysis video which basically talked about how over half of Americans don't even have $1,000 saved up for emergencies. And that's scary, because for most people, emergencies that they go get a payday loan for is not even like a $10,000 emergency or like a $50,000 emergency. A lot of times this is like a few $100s or a few $1,000s that had they had an emergency fund, even a 1, 2, 3 month emergency fund, they would have been in a better financial situation. And the best thing to strive for is a 6-month emergency fund. And that's what I always tell a lot of people: sacrifice a little bit now and build up that emergency fund. And if you ever used that emergency fund, replenish it. Use it only for emergencies that are immediate, because an emergency fund turns some emergencies into inconveniences. So if your tire goes out, you don't need to go get a payday loan. Instead, you have an emergency fund. If, God forbid, you lose your job and you need a month of income to sustain your apartment, your car, before having to go get a different job, or in the meantime where you're looking for a different job, again, you have an emergency fund for that. This is such a sad topic to talk about, but it's really important that we discuss this and let people know that there is a better way. So with this, I am bringing this video to an end. Like, comment, and subscribe to my channel, and let me know in the comment section, have you ever taken a payday loan, or do you know anybody who has? And what are your thoughts overall on payday loans? But thank you for watching. Like, comment, and subscribe, and ring notification bell, because I post 2 videos a week on Tuesdays and Fridays. Come on over, you guys, and let's have this talk. Sometimes it's fun, sometimes it's more hard topics like this, but we covered them all. So thank you for watching, and I hope to see you in the next one. Bye.